Hey guys, welcome back to another session of using technical analysis to find high probability setups in the markets. Right, so today we're looking at gold on the H1 chart. Right, first and foremost, I noticed this descending resistance. Right, very nicely touching touching the wicks a couple of times. Right, so that to me is a very strong sign that we are looking at a little bit of bearish, quite a bit of bearishness, the bearish momentum on a shorter term time frame on the H1 chart. I also do notice that price has more or less broke out of this trend line, triggering a huge drop, right? And in terms of a horizontal kind of resistant perspective, right, this is definitely a level I'm looking at, right? So the general momentum that we're looking at, right, if I'm going to look at a little bit of Ichimoku throwing this in, right, it looks like it might be holding a bit over there, right? But on the H1 chart, it's not so strong. So I do want to start looking for opportunities to continue to play the move down. Okay, I will scroll far back and see if there's any big level I'm missing. Nope, no big level. All right, so I can safely highlight this will be the next level that we can play to. Okay, this why I'm looking at these levels, because it's a nice little bounce here, nice little reaction here, right? So this could be a level. If I want to fine tune it further, I draw Fibonacci retracement all the way to the top. I see does it line up anywhere? It's above 78.6. 61.8 is a little bit too close, right? So I think it's just about right. If I look at a Fibonacci projection, it's probably at the 127, right? So this could be the first level I'm playing the move to. If I want to fine tune it here, right? But I'm going to put it over here. Okay. So what we could be looking at, right? What we could be looking at is this could be our entry, right? This could be our take profit. And where would I put a stop loss, right? We can see that there's a resistance level over here, right? There's a resistance level over here, right? So what I like to do is also give my stop loss a little bit of breathing space, right? I might just put it about here, right? My stop loss would probably be about over here. Give it a little bit of breathing space to play a very, very short-term move down to here, right? We got about 1:1.5 or 1:2 kind of risk reward. Personally, just looking at this setup, right, I do think it's this 61.8 is a very big level to consider. 61.8 over here. This will give us a risk reward 1:1. So if you are feeling safer, your entry can be here, just playing a reaction down to here, right? If you're a little bit more adventurous, you can play the move down even further, all the way down to here, right? But for the sake of this example, right, we can just go and call a 1:1 move from here down to here, right? It should be enough for a day trading setup. Our risk reward is a healthy 1:1. Descending resistance, showing that there's a fair bit of bearish momentum, right? And this is a very nice overlap. So if price comes back to here, it's a pretty good re-entry point where we can consider for price to make a push down further to the 1758 level. Okay, that's it for me, right? Tune in again tomorrow, as we look at more trading setups using advanced technical analysis, combining Fibonacci, support and resistance, momentum, trendline breakouts and stuff. All right.